Hey everybody, this is the Show, the Upside Mortgage Show. My name is Kelham Brown, the mortgage official. I am a high school varsity official by night and by day, a Dallas-Fort Worth mortgage loan officer, helping people get into their new homes. And with me is Dave Brown, the mortgage coach. I'm going to keep Dave inside the lines. Dave tends to get off a little bit, keeping the mortgage jargon to a minimum and easy to understand for everybody.
Hey everybody, I am Coach Dave Brown, and I've got 30 years in the mortgage game. I've literally been involved in over $20 billion of loans. So I've got a few things up here that I might be able to share with you. And with the help of our mortgage official, Kelham here, I might just be able to break it down in a simple, easy to understand way so that even myself will be able to understand it. And that's going to be the goal, because here on our Brown mortgage team, we are building the best mortgage team in DFW. And it all starts with giving you, our fans, who are our clients, all right, the game plan and the playbook of how to make this mortgage process as simple and easy as possible. And that's what we're here to do.
100%. And so if Coach Dave gets outside the lines, we're going to have to hit him with a mortgage technical foul. So this week we're going to talk about some massive mortgage news that happened and a shift that happened in the news. Big news this week from Fannie Mae and Freddie Mac, Coach Dave. It is Wednesday the 14th, and I've got some numbers to read off for you from the weekly report. So in the weekly survey, the 30-year fixed mortgage is down to 6.16%, almost a full percentage point from a year ago. That is down significantly from recent years. And we're starting to see a real pivot in the headlines with the Wall Street Journal and other trackers showing the market is finally starting to move towards that 5% people have been waiting for.
Man, I'll tell you what, Kelham, it is a huge move, and I call this the mortgage green zone. It's literally, this could be a market timing window for those people for those of you, that are a home buyer that have been thinking about entering the market. This is where rates have relaxed. But I got to tell you, Kelham, where the real opportunity is right now is not that rates are starting to dip into the fives on conventional, and we're even quoting some lower rates than that on government loans. But where the opportunity is the spring home buying market hasn't hit yet. And I'm going to throw out a statistic. I read this week that Fannie Mae said that there's literally 5 million home buyers that are ready to enter the home buying market between now and the spring market that starts as the weather starts to improve, not only here in DFW, which is beautiful already, but around the country. And that means, Kelham, as you know, what happens when there's more borrowers in the market?
There's
more competition. So this is why I call it the mortgage green zone right now. It's a great opportunity.
Yep, and we had the opportunity to work with somebody earlier this week who, conventional buyer, we're not going to go too far down the rabbit hole, but at a 5.75% rate with great credit and great down payment, those are a couple things you need, but people are already taking advantage.
Yeah, we were. I mean, I was shocked when you called me to say, you literally were able to quote somebody that rate, a specific client and scenario we had, but that's the opportunities. And so here's what we're doing right now. I got to tell you though, Kelham, if those that are listening, if you're waiting for the perfect number, okay? Fannie Mae data suggests, as I said, 5 million home buyers. 5 million could be entering the home buying market nationally, okay? So you win the pricing game by buying while the crowd is still sitting on the sidelines, and that's important, okay? And what do I mean by that? Right now, if you're comfortable, and I always say this, right? You have to be comfortable, Kelham, right? As a coach, I try to, help you and others understand, and our home buyers, that old cliche that people have said that we're not going to use on this show. It is, well, I'm going to say it, and you blow the technical foul when I say it. You hear me? You need to just date the rate, but marry the house.
Dave, you had to go there.
I know, but here's the deal, Kel. We don't talk that way, do we?
We don't talk that way.
We don't talk that way. Other lenders do. Big banks do. The reason lenders talk like that when you hear it and see it online is that's because they're quoting you higher interest rates. That's not right, because what if rates never come down? You have to be comfortable with the rate and the payment that you're buying a house at right now or at the time when you're buying. And that could be your payment and rate forever, and you need to understand that. So we don't talk like that here on the UM show. We do not mislead people because of high rates and things. It's not what we do here on the show. All right, let's get back to the fun and talk about the slam dunk game plan here.
For those of you listening who have no idea where to even start, what to Google, where to go, here's what your process is going to look like. Coach Dave's going to break it down for you with our slam dunk game plan that we walk our clients through.
You know what, Kelham? You couldn't have laid it out there better. And in fact, at the end of this, all you have to do, we've created an amazing guide for you, a playbook, the Slam Dunk Game Plan playbook for you. All you have to do is respond to us, and we'll send that to you. No obligation whatsoever. But here's the deal. It all starts with your pre-approval. And Kelham, we see it all the time. In my 30 years, I still can't tell you how many times I see home buyers go out to open houses and things like that, and they fall in love with a home before they have a pre-approval in hand. And I got to tell you, I remember one time when I was a little younger, I went out and drove a really nice fancy sports car, only to find out that I didn't qualify for it, and I had to settle for something a lot less. And that's kind of what happens with a home, and we don't want you to do that. So we want you to start with getting a solid pre-approval. And what does that mean? We start out by checking your credit, your income, your assets, so that we can issue you an ironclad, solid pre-approval that you and your real estate agent can take to the table to negotiate the best possible offer for you. All right. Once we have that pre-approval in place, Kelham, then what we do is we start designing the different options that are available. And as a mortgage broker, we literally have over 250 lenders that we can look at all the different programs, rates, and different things like that. And I'm not going to get into the weeds because you're not going to blow another technical foul on me, but we create your playbook then for you. All right. And so we call it our slam dunk game plan, so that you have all the options laid out in front of you so that you and your agent can design the best offer and get you the best deal on that house. That's the way to do it. You buy with confidence. And that's from 30 years of mortgage and coaching experience. That's the way to do it. And that's why we call it our slam dunk game plan, Kelham.
You know, Coach, I got a question for you. And it kind of goes back to the client we were talking about earlier. Not all lenders are created equal, right? Because what he was telling me when we got on the phone was he was getting quoted in the mid to high sixes. Now, how can we be almost 1% better than they are, and we work in the same industry?
I got to tell you, that's a great question. So, all right, everybody, I need you to huddle up. Okay, we're like calling a timeout right now, not a technical foul, but huddle up because I need to share some information with you here. So this is what I call the management mountain. Now, what is that, you might ask? So here's the deal. Big banks and big, lenders, those are the ones that, have corporate offices all around the country, multiple offices and things like that. Well, here's the deal. They have this big corporate structure that they have to pay for. They have local managers. They have area managers. They have regional managers. They have divisional managers. They have vice presidents on top of vice presidents. And then they might have multiple presidents and all those kind of things, all right? I call that, think about it this way. It's like a corporate tax, all right? That's what it really is, because every one of those layers or levels that I just mentioned, okay, that's additional cost that has to be added to the rate, okay? Somebody's got to pay for it, right? It's no different than just think of it like our government. The bigger our government gets, there's more taxes that have to pay for everything. Not getting into a political diatribe here. This is just facts. But one of the beautiful things about working with us as an independent mortgage broker, we use kind of what I call common sense and price discovery to skip all the corporate tax. I love it. And we pass that savings directly on to you to be able to get you the absolute best deal for you. That's what we do. Pretty simple. I appreciate you helping me out with that, Kelham, because that's exactly what we do, right?
A good visual always helps. And competition is a very healthy thing. And so when you go to one of those large retail places, they've got one sheet. We as mortgage brokers, and a shameless plug, have over 270 different lenders to tailor your scenario directly to you with none of that middle management cost and all of the savings. So there's no one size that fits all, but there's always an option out there that we can try to get you into.
So let me finish one other thought on that, Kelham, because I've been in this business 30 years. And so the reality is I've worked at some of those big institutions, the ones with the big offices and so forth, the nice shiny showrooms and in conference rooms and things like that. But here's the deal exactly. As our fans and our clients, you shouldn't have to pay for all those layers of management, taxes, or bonuses, right? Not here in North Texas and not anywhere around the country. That's a beautiful thing about working with someone like us. I'm just telling you, you don't deserve to pay that. You deserve the best deal possible. So let's keep moving on, Kelham. What do we got next here?
So we're going to wrap up with the 2-minute drill.
The 2-minute drill, I remember the 2-minute drill being where we had to get 32 layups in 2 minutes. Is that what we're talking about when I was in high school?
Not quite the same thing, Coach. We're going to wrap up this episode, and so what that means is, what's the best first play or first action someone can take today to get started on their home journey if they're looking to purchase this year in 2026?
Oh gosh, I got to tell you, I'm gonna say two things. One, request the free guide that we've created. It's just going to give you some additional information about what next steps to take. The other thing, if you're a first-time home buyer, I'm going to drop an A and a B. One, I would look at think about buying like a multifamily unit, utilizing possibly an FHA or a low down payment loan, and buying maybe like a duplex where you actually move in for a couple of years, live in that unit, and you generate rent from the other side. I think that's an amazing play for first-time home buyers if it's available in your marketplace, okay, as far as that type of housing. And the other thing, with rates starting to dip, I think now utilizing something that we call a buy down, which I'm not going to get into the weeds here because I know what you'll do. You'll blow another one of those technical fouls on me. Okay?
You were tiptoeing with multifamily, but I let you finish.
Ah, man, I'm so glad. I had to think that through. But that'd be the other thing. I think there's something called a buy down that we're going to go into on another show where we're going to break it down. I got my my whiteboard. We're going to write it out so it's real easy to understand. But it's how you can get in with lower rates for the first couple of years on a fixed rate mortgage. And so we'll talk about that. And then the second point of that was, multifamily, you letting somebody else help pay your rent.
100%. So if you guys have any questions, obviously comment down below, get that free guide, and then obviously taking the next steps, we're going to give you a link to schedule time with us to help you get set on the right path and tailor your options so that you guys can make sure you achieve the American dream.
Kelham, it's been fun. Can't wait to see everybody next week again for episode 2 of the UM Show. So for Dave Brown and Kelham Brown, catch you next week.